Hey everybody, welcome to verifiedinvesting.com. My name is Gareth Soloway, Chief Market Strategist here. Now in today's video, we're going to discuss two big options trades that I just put on. I'm going to give you the exact contract, expiration, strike price, and even my entry and the amount of money that I've invested in each one. And again, I'll go over my options kind of philosophy, how I trade options when I do, and to give you guys a full view of everything. Plus, of course, remember, it's all charts, no BS. So we're going to really dive into the charts and why I think based on the charts, these put plays on two specific stocks could pay out sizably. All right, so let's dive into those positions, guys. Again, this is a snapshot from my actual account, and I just put underneath, since they kind of put it in code here, what those positions were. My first one is JP Morgan. Their puts, the expiration is March 20th of 2026, strike price of 300. The second one, GE puts, expiration same one, 03/20/2026, and the strike is 270. You can see I've picked up 350 puts at 1875, totaling $656,250, and 200 contracts for JP Morgan at 1820, totaling $364,000. So totaling combined over $1 million in options here, guys. And again, as always, I'm going to explain the data behind why I took these positions. Now, first of all, there's no way I'm ever letting these things get towards the expiration. These are done specifically because I expect a move in these stocks in the near term over the next 1 to 2 months, significantly in that direction, at which point I will take profits and run. So again, you never put, at least for me, I never put this much money on the table and let it go to expiration, because that's where you can lose it all. So there's very defined statistics or factors that I will be looking for. And again, in these situations, when you buy multiple months out, in this case, about 6 months out, I'm not really looking for 100, 200, 300% gain, right? I'm essentially putting a lot of money in, probably looking for a 20 to 40% return on that investment, and then pull the ripcord and get out, because as these things get towards expiration, they could lose significant amounts of value as, again, depreciation, essentially, the time value factor of options gets closer to expiration. So let's get into the charts here and take a look at what the charts are showing us. First, we're going to start with GE. GE, again, is now double topping. So you have this classic double top right here. We can see, again, it's right into that little double top. Now, is there a possibility, folks? Is there a possibility that it could go a little bit higher? And the answer is yes. There is an all-time high that's just a little bit higher. So I'm willing to get in, understanding that it could go up another $5 to $10 on the stock. On the options, that would only cost me a little bit of money, right, to have it go up. I mean, basically, it's at 281 right now. So if it goes to double top on the daily chart going back to the year 2000, we're talking about only another $8 and change on the stock to the upside. That would probably be the equivalent of $1 to $2 of a drop in those put plays. And again, I'm willing to take that risk to get skin in the game. The idea is we have the near-term double top right here. We have the long-term double top coming up right here as well. All right. So again, we can put that line in right there. So we have our two levels very, very close. In addition, there's a trend line here that I absolutely love. We broke this trend line right here. Okay. And look, we're retracing to the scene of the crime. So there's a huge area right in here of resistance with additional resistance right above. And so for me, I have a lot of factors here that are telling me, okay, we're looking at an opportunity for a dump out. You could even see, again, a big reversal red candle, and now kind of the consolidation. Generally, this will resolve itself to the downside with a small chance it could tag double top before it pulls back. Where am I looking for to where I would consider taking profits on a dump on this stock? Essentially looking for that, let's say, 20 to 40% gain on the options. I'd be looking to take some off right here around 260 to 255. This area, high pivot, high pivot, high pivot, or low pivot. Again, so significant amount. And then I'll probably let some run maybe a little bit lower down to this 236 area right there. That could net me a bigger gain than 20 to 40% if it gets down there. But the idea is somewhere in this vicinity, I'll start legging out of these put options and taking it off the table. All right. And same thing. In my head, I have kind of an acceptable level of risk, probably willing to lose about 20% on this if it doesn't pan out, if I'm totally wrong, and that's always a possibility. But the chart itself is really into a ripe opportunity for these puts. And notice how I'm not coming. I mean, these days, people buy 0-day options all the time. Okay. That's gambling to me. All right. If you ask me where a stock is going to be later today, I mean, I might be right, I might be wrong. But when I look at the daily chart and I have multiple resistance factors, I can put my opportunity of success at about 80%. And that gets me in a position where it's worth taking the risk for basically a 1 to 2 times gain to the downside of what I'm risking on the upside. All right. So again, I wanted to kind of go over that. All right. Next, let's take a look at JP Morgan Chase, JPM. I'm loving this, guys. Again, JPM is at all-time highs today, but look, it's coming right into this trend line. And bear with me, I know I didn't put up my chart. There we go. The chart right there. So here it is at all-time highs. Just took out this previous high. But again, look, it's right nearing at 305, this big level. Okay, and that's an upsloping parallel. Look at the last time it hit this parallel back in February. Boom. Then it hit, and this was a smaller pullback, smaller pullback. It's likely going to hit again. And then what we want to see is a break of this trend line here. If that happens, you should see a correction. My target is 270 on these put plays. So I want the stock to go to 270. Whatever the options are at that point, that would be the level where I would be taking profits. Again, the idea here, major resistance right up here, extended chart. You have a lot of signals about negative divergences on this NGE's chart. And all of them are pointing to major resistance at hand or very near with significant reward to the downside. All right. So again, very, very intriguing here in terms of these opportunities. And I think it's important to understand is that options trading is trickier than stock trading or crypto trading in that you have to worry about the time factor, right? When you pay a premium for the amount of time that you're getting for that thing to play out. And by the way, some people will say, oh, I only do 0-day options. Oh, I only do, monthly options. Those people, that's fine if they can do it successfully. What you're doing there is you're saying to yourself that I am 80% sure that this will play out in this amount of time. And when you cut it smaller and smaller and smaller, the odds of you being wrong are greater and greater. Is it possible in the next 6 months we get a decent pullback in JP Morgan, especially with the chart that we just went through? The answer is yes, very possible and probable. In the next day or two, week or two, who knows? But the idea again is that for me, as an options investor, I'm not willing to take the risk of losing my capital significantly versus taking a little risk. Granted, it's a lot of money. Don't get me wrong. That's just a lot of money in options, even for me. But for me, again, it's about quantifying the risk, giving myself extra time because I can call a move out 3 or 6 months very easily. In the next week, I might be wrong. And so I don't want to take the risk with my money that I'm wrong for a 1-week move. But over the next span, the charts are so accurate, we can get to that 80% success rate. And again, that's the way I'm trading. And some people will say, well, why don't you buy way out of the money, puts or calls? I don't like doing that. I like buying right around the money because, again, yes, you pay a little bit more, but you don't need as significant a move and you're much closer to your break even. If it doesn't pan out, and let's say JP Morgan just drops from this 300 level back to 285 or 280, I'm basically break even at the end of that 6-month period, right? And that's okay. I'm okay with that. Now, I'm obviously going for the bigger score, but as a trader, both day trading, swing trading, as well as with stocks, options, and commodities and crypto, the idea is you really want to analyze your risk before your reward. I mean, listen, we all dream about winning the lottery. We all dream about hitting the home run. But in reality, that gets us into trouble by focusing too much on the reward. We all need to focus more on the risk. Quantify your risk, minimize your risk, and you will make way more money through the course of your investing career. All right, just some wise words from me, guys. But I just wanted to share those two trading opportunities. Feel free if you want to take them. You guys do what you want. I'm just sharing what I am doing as always. And again, I will keep you posted on these. Have a great one, and thanks for tuning in. Take care.